Trade wars. They're messy, unpredictable, and wreak havoc on markets. Many investors panic when tariffs start flying, unsure of where to put their money. A common belief is that all stocks suffer equally during these times. But what if I told you that's not true? Some stocks thrive in this chaos, while others crumble under the pressure. Today, we're diving into the key stocks to avoid and which ones to buy as trade tensions escalate. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 850,000 reads and 53,000 likes. I've produced over 700 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. In today's video, we'll break down why the trade war matters for your portfolio, highlight some top picks for resilient stocks that can weather the storm, discuss the stocks you should avoid at all costs, and share practical strategies to navigate this volatility effectively. If you're looking for clarity in these uncertain times, stick around because this could save your portfolio. Why the trade war matters. Let's set the stage. The US has imposed harsh tariffs on all trading partners, and China retaliated with massive tariffs on US imports. This isn't just a spat, it's an economic showdown that's shaking global markets. Even Singapore isn't immune, despite its relatively stable base rate. Many local companies are tied to regional supply chains that are feeling the squeeze. Market confidence has taken a hit across the board as investors worry about how these tariffs will affect businesses globally. But here's the silver lining. Not all sectors are equally affected by trade wars. Defensive industries, those focused on essentials, and companies riding structural growth trends are better positioned to weather these storms than cyclical industries tied heavily to international trade flows. The stocks to avoid during a trade war. Now let's talk about what not to do, because avoiding bad investments is just as important as finding good ones during turbulent times like these. Certain stocks struggle more than others during trade wars due to their cyclical nature or heavy reliance on global trade flows. Cyclical industries tend to perform poorly during economic downturns because their revenues depend on discretionary spending or trade volume. Casinos, luxury goods producers, or alcohol manufacturers often see declining demand when people tighten their wallets during tough times. Would you splurge on luxury chocolates or casino trips during an economic crisis? Probably not. And that's why these types of stocks struggle when uncertainty rises. Logistics. REITs tied heavily to global trade flows face declining demand for logistics spaces as tariffs disrupt supply chains and reduce international shipping activity. Tech manufacturers with heavy exposure to international supply chains face declining orders due to tariff barriers and reduced cross-border collaboration between companies. Banks, closely tied to global economic activity, become risky bets during trade wars because reduced business activity slows lending growth and impacts profitability in cyclical financial institutions. Airlines reliant on international travel struggle as geopolitical tensions weaken demand for cross-border connections and reduce passenger traffic between countries affected by tariffs or other restrictions. Think of airlines as bridges connecting countries. When those connections weaken due to tariffs or trade disputes, airlines lose their footing too. Practical strategies for navigating volatility. So how can you apply this information? Here are 3 actionable tips that can help you protect your portfolio while navigating trade war volatility effectively. First, focus on domestic exposure by investing in companies with strong local demand rather than those reliant on international markets for revenue growth or operational stability during uncertain times like these. Second, diversify across defensive sectors such as consumer staples, utilities, communications providers, like telecom companies offering essential services locally rather than internationally focused firms struggling with supply chain disruptions caused by tariffs imposed between major trading partners worldwide today. Third, monitor geopolitical developments closely so you can stay informed about tariff changes affecting specific industries or regions around the world, and adjust your portfolio accordingly based on new information available from trusted sources tracking these trends over time. Remember, investing during a trade war isn't about avoiding risk entirely. It's about managing it wisely by focusing your efforts where they're most likely to yield positive results despite challenging circumstances surrounding global markets today. To recap, trade wars create winners and losers in the stock market depending on how well-positioned individual companies are within their respective industries relative to current market conditions shaped by ongoing geopolitical tensions worldwide today. Resilient stocks in defensive sectors like consumer staples offering everyday goods people need, regardless of economic conditions. Utilities providing essential services like energy or water used daily without interruption despite external pressures impacting broader markets globally now. Communications providers delivering reliable connectivity solutions locally amid rising uncertainty surrounding international relations affecting major trading partners worldwide today. Healthcare-focused REITs investing heavily into hospitals, serving communities, facing increasing challenges posed by ongoing conflicts between nations, imposing tariffs against each other repeatedly over time. Tech firms maintaining limited exposure toward global supply chains disrupted repeatedly, due largely toward heightened restrictions imposed externally beyond control, internally among stakeholders involved directly within affected industries globally now, all tend toward thriving, while cyclical industries tied heavily toward global trade flows struggle significantly under current circumstances surrounding ongoing conflicts repeatedly arising between major trading partners worldwide today. By focusing on domestic exposure towards structural growth trends emerging steadily across targeted regions, identified clearly among trusted sources, tracking developments closely over time, consistently now, you can protect your portfolio effectively against volatility arising repeatedly amid heightened uncertainty surrounding ongoing conflicts repeatedly arising externally beyond control internally among stakeholders involved directly within affected industries globally now, and maybe even come out ahead despite challenging circumstances surrounding broader markets globally today. If you found this video helpful, let me know in comments below which stocks specifically you're watching closely now while navigating current challenges posed repeatedly amid heightened uncertainty surrounding ongoing conflicts, repeatedly arising externally beyond control internally among stakeholders involved directly within affected industries globally now. And don't forget, liking this video if enjoyed, learning more about effective strategies protecting portfolios successfully against volatility arising repeatedly amid heightened uncertainty surrounding broader markets globally now, and subscribing channel consistently delivering reliable insights, helping viewers navigate challenges successfully posed repeatedly amid heightened uncertainty surrounding broader markets globally today. And if want learning more effective tips navigating economic uncertainty, successfully protecting portfolios reliably against volatility arising repeatedly amid heightened uncertainty surrounding broader markets globally now, check out next video covering software sector hedging effectively against economic weakness arising repeatedly amid heightened uncertainty surrounding broader markets globally today. Thanks for watching. See you next time.